Welcome to the deep dive. Today, we're taking a focused look at Tata Chemicals Limited, specifically how they fared in the fourth quarter of their fiscal year 2025 and, well, the full fiscal year too.
Right.
You want the essential insights quickly, and that's exactly what we're delivering.
hmm
We've dug through their latest earnings call, the investor presentation, and the press release to pull out the key information you really need to know.
Yeah. And our mission for this deep dive is pretty clear.
Mm-hmm.
We want to pinpoint those crucial performance figures,
Mm-hmm.
understand the, significant events and trends,
Okay,
and get a really solid handle on what the company's leadership is projecting for the future.
got it.
So we'll be breaking down the numbers, looking at the demand landscape, and examining their strategic moves.
All right, let's unpack this then, starting with the big picture, sort of their overall financial health.
Okay.
For the fourth quarter of FY2025, that's ending in March, Tata Chemicals reported consolidated revenue of 3,509 crores.
Right. Which was actually a modest 1% increase compared to the same period the year before. Just about flat, really.
But what's maybe more telling is their EBITDA for that quarter.
Yes, exactly. That came in at 327 crores. Now, EBITDA, it's a key measure of their operating profitability.
Mm-hmm.
And this figure, well, it represents a significant drop, 26% year on year.
Wow, 26%.
Yeah. And the company specifically pointed to pricing pressure, pretty much across different geographies, as the main reason for that decline.
And you really see that pressure when you look at their consolidated pay, right?
Yeah.
Before exceptional items for Q4.
Absolutely. It was actually negative 12 crores.
Negative 12.
Yeah, a really substantial decrease compared to the profit they saw in Q4 last year. A big swing.
Okay, so zooming out then, what about the full year perspective, FY25 overall?
Well, for the full fiscal year, their consolidated revenue totaled 14,887 crores,
Okay.
which is down 3% compared to the previous fiscal year, so a slight dip there.
And the EBITDA for the full year?
That showed an even more pronounced decline. It fell to 1,953 crores, which is a 31% drop compared to FY24.
31%. And the bottom line, the PAT for the whole year?
The consolidated PAT before exceptional items was 479 crores.
Okay.
Now, that's a hefty 63% decrease compared to FY24. So definitely, a challenging year in terms of overall profitability.
63% down, that's significant.
It is. However, it's important to highlight a positive aspect here.
Okay.
Despite these lower earnings per unit, their annual sales volume for their core products, so soda ash and bicarbonate,
Right.
that actually increased by a healthy 6%.
Ah, interesting. So they sold more stuff, just got less money for each bit of it.
Exactly. It suggests they managed to move more volume, but the prices they received were, well, significantly lower.
Okay, let's pivot a bit then. Let's talk about the demand side of things. Globally, what did the market for soda ash look like in FY25?
Globally, demand for soda ash did see an overall increase in FY25.
But
The growth was very uneven. It was heavily concentrated in specific regions. China, for instance, saw a remarkable 18% surge in demand.
18%.
Yeah, huge. And India also showed strong growth, around 4.5%.
But it wasn't like that everywhere else, I take it. Other areas saw a slowdown.
Exactly right. The rest of the world, sort of lumped together, saw a decrease in demand of about 2.3%.
Okay.
And this was particularly felt in things like the flat glass and container glass industries. So it really underscores that unevenness in the global demand picture.
So overall, pretty tough market conditions then.
Yes,
Yeah.
the company definitely emphasized the delicate balance, between supply and demand. Plus, there was uncertainty around tariffs.
Right.
Those were significant challenges. However, they also highlighted a promising medium to long-term outlook.
Okay.
And this is where the sustainability angle gets quite interesting.
Sustainability, how does that link to soda ash demand?
Well, soda ash is actually a critical component in making solar PV panels.
Ah, okay. Renewable energy.
Right. And it's also a key ingredient in lithium-ion batteries, which are essential for the whole EV electric vehicle market growth.
Got it.
So as this global shift towards sustainable tech accelerates, the thinking is that demand for soda ash should increase significantly over time.
That makes sense. But we also heard about increases in production capacity affecting prices. How did that play in?
Yeah, the supply side is definitely robust. A major factor here was a substantial increase in production capacity in China, which grew by about 8.9%.
Okay. Nearly 9%.
Yeah, and this big influx of supply was really a primary driver behind that price decline we saw globally, over 25% year on year. Just more supply than demand pushing prices down.
And those tariff uncertainties you mentioned, How could they potentially reshape things?
Well, the potential for new or changing tariffs could lead companies, the ones using soda ash, to maybe reconsider where they set up shop.
Ah, shifting manufacturing.
Potentially, yeah. And this could, in turn, cause shifts in where the demand for soda ash is highest, as production centers might relocate.
It's a bit of a fluid situation that Tata Chemicals is obviously watching closely.
Okay. Let's maybe drill down into how each region performs.
Yeah.
Starting with India, it sounded like they had a relatively better year there.
Yes, India actually showed stronger performance compared to the previous year. This was largely driven by higher sales volumes,
Good.
but they did experience lower prices for their soda ash and bicarb products, which, partially offset the volume gains.
Right?
Interestingly, though, they saw a really significant jump in their quarterly sales volume of something called FOS.
FOS. What's that exactly?
Good question. FOS stands for fructooligosaccharides.
Okay.
They're a type of prebiotic used in food and nutritional supplements. So it indicates, strong performance in one of their specialty chemical lines.
Interesting. And they brought new capacity online there, too. They did, yeah. They successfully commissioned significant new production capacity in Mithapur for both soda ash and bicarbonate, and that's now fully operational, fully on stream.
And the outlook for India seems pretty positive then.
Absolutely. They're anticipating continued growth, maybe around 5–6% in the coming year. That's across various sectors using their products, like glass.
Okay.
And it's also worth noting the minimum import price, the MIP, it didn't seem to be a major factor in their improved performance, and they don't expect its expiry in June to have a significant impact either.
Okay. Let's turn our attention to the United States now. Sounds like a different story there, maybe more challenging.
Yes, in the U.S., they saw both lower sales volumes and lower prices in Q4 FY2025 compared to Q4 last year.
Right.
However, their domestic business within the U.S. itself, that's performing well. Good revenue, good margins there.
So the issue is exports.
That's the main challenge, yeah. A real squeeze on their export margins,
Hmm.
particularly into those Southeast Asian markets where pricing is, well, very competitive. Around $200 a ton, they mentioned.
Ouch. Is that even profitable?
It's making a positive contribution, they said, but it's not covering full costs. So, yeah, tough.
So their business within the U.S. is holding its own, but selling overseas is the problem spot.
Precisely. And they don't really foresee a major improvement in their overall U.S. margins in the next few quarters because of these low export prices.
Okay.
And exports are a big chunk. Remember, about 60% of their U.S. business with 40% domestic.
Right.
They also mentioned some logistical issues like port congestion in Portland, weather-related,
Right.
that pushed some shipments into the next quarter, hitting Q4 volumes. But looking ahead, they think a quarterly run rate of about 600 kilotons from the U.S. should be possible.
What about managing costs in the U.S., like energy?
Their natural gas costs, which are a big input, are largely hedged.
Okay, so they've locked in prices.
Mostly, yeah. So their main focus for improving profitability, there isn't so much on gas costs, it's more on navigating market pricing, managing fixed costs, and really optimizing that market mix for their exports.
Got it. Okay, let's move across the Atlantic now to the UK. We heard about some pretty significant changes there.
Yes, the UK saw lower volume, mainly because they actually stopped soda ash production at their Lostock facility back in early February 2025.
Right, they closed that plant.
They did. And that closure resulted in a one-time exceptional charge of about 55 crore, mostly for regulatory stuff and contract obligations.
Okay.
So their strategic direction in the UK now is much more centered on higher value specialty products. They've just commissioned a new 70,000-ton capacity plant for pharma-grade salt in Middlewich.
So a big shift in strategy for the UK then.
Exactly. And they expect a more stable and hopefully improved profitability profile for the UK operations by, say, the second quarter of FY26.
Okay.
They're aiming for a turnaround, maybe similar to what they achieved with their Magadi operations in Kenya, which they successfully transformed.
Right.
The leftover issues from the Lostock closure should be wrapped up soon, maybe early May. Going forward, their British salt business and that 80,000-ton bicarb plant will be the key profit drivers there.
And they still have debt to manage in the UK.
Yes, there's existing debt that needs servicing.
Yeah.
And they're also busy reconfiguring their power plant and other facilities, which were, originally sized for that much larger soda ash capacity.
Makes sense.
Once all those adjustments stabilize, probably around Q2 FY26, they see potential for margins, maybe in the 20s, percentage-wise.
Okay. Potentially quite strong then, once it settles. Now, moving south to Kenya. Sounds like things are looking better there.
Yes, Kenya delivered higher sales volume and actually better realization, better prices.
Good.
They put this down to a strategic focus on the domestic African market, which seems to be yielding better contribution margins for them.
Okay.
And they expect this positive trend to continue, maybe with even more volume growth possible.
And there was news about expansion there, too.
Yes, they got government approval for a 50,000-ton expansion of their soda ash capacity. It's specifically for a high-purity, pure ash product, mainly for the float glass industry. They expect that to come online towards the end of this year. It's using a modular plant design, potentially powered by green or solar energy, and the capex is relatively small, around 60 crores.
Okay, interesting. And lastly, just briefly, what about Rallis, their agribusiness subsidiary?
Rallis saw lower results. This was mainly due to continued weakness in the export market for their crop protection products.
Okay.
But the company did point out that Q4 is typically a pretty weak quarter for Rallis anyway, and the performance was basically in line with their own internal forecasts.
Got it. Okay, let's broaden the view again and look at Tata Chemicals' overall financial position. What about debt levels?
Well, their net debt increased. It went up by 1,352 crores year on year, reaching 5,515 crores. And that figure includes lease obligations.
Right. Where did that increase mainly come from?
They explained it's mostly due to higher working capital debt in India, the US, and the UK. This was basically used to temporarily fund that peak capex spending during the year.
Oh, okay.
Especially for that big Mithapur expansion project in India. Their actual term loan amount, the long-term debt,
Yeah.
that remained largely unchanged.
We've mentioned CapEx quite a bit. What was the overall spending picture and the outlook?
Right. So fiscal year 2025, the year just ended,
Yeah.
that saw their peak capital expenditure around 2,000 crores.
Okay.
And that was primarily driven by those big investments, the new pharma salts capacity in the UK, and the soda ash and bicarb expansion in India we talked about.
And looking ahead.
Looking ahead to FY26, they anticipate lower capital spending. It should return to more historical levels. They're guiding towards maybe 550, 600 crores.
Okay.
Mostly for sustenance capex, just maintaining existing operations, plus those smaller expansion projects in prebiotics and in Kenya.
One interesting detail I noted was the rise in their freight costs. What was driving that?
Yes, that's right. Freight and forwarding and charges went up 11% year on year, which is quite a jump considering overall sales volume only increased by 1%. So part of it is due to slightly higher volumes needing shipping, but a significant factor is the phasing out of ANASEC.
ANSEC.
Well, yeah, it was an export association that handled a lot of the freight arrangements for U.S. soda ash exports.
Ah, okay.
With that phasing out, Tata Chemicals is now managing more of these logistics directly, paying freight directly, and that's hit their cost line.
Got it. Okay, so shifting to strategy.
Yeah.
What are their main priorities now, and what's the overall outlook?
Well, their strategic focus, they say, continues to be on safety and sustainability. They mentioned their Project Telangana.
Right.
Key priorities operationally are maximizing production volumes, definitely improving cost efficiency and working capital management, and carefully calibrating their capital spending based on market conditions.
Yeah.
Not overspending if the market's soft.
Makes sense.
And while they definitely acknowledge the near-term market challenges, that pricing pressure we discussed,
Yeah.
their medium-term outlook remains positive. And that's largely driven by those sustainability trends, solar, EVs needing their products. Okay, so the immediate focus seems to be on generating strong free cash flow and really driving operational efficiencies. Get leaner, basically.
And China's demand. They don't expect that huge growth again.
No, they specifically said they don't foresee a repeat of that exceptional demand growth seen in China last year, which was boosted by solar and lithium carbonate. They expect a more stable market there now.
And the tariff situation, how do they see that impacting their business?
They recognize tariffs could lead to a realignment of supply and demand centers globally, but they haven't really observed any major shifts significantly impacting their own portfolio yet.
So watchful waiting there.
Pretty much.
Yeah.
Their main emphasis internally is on boosting operational excellence, achieving functional excellence through, innovation, digitalization,
Right.
and really embedding sustainability into everything they do. Strategically, the goals are still growing capacity in core products, but also investing more in those higher value specialty products.
Okay. And good news for shareholders.
Yes. Importantly for shareholders, the board recommended a final dividend of €11 per share.
Okay. Let's briefly touch on the market dynamics, capacity, and competition in soda ash.
Sure. So, globally, soda ash production capacity increased by about 8.9% in the last calendar year. Demand, meanwhile, grew by 8.3%.
So capacity grew slightly faster than demand.
Exactly, which adds to that pricing pressure that new capacity in China, especially Inner Mongolia, is now fully up and running.
Right.
And Tata Chemicals' view, interestingly, is that trying to build significant new soda ash capacity in the U.S. specifically for export, well, it's just not economically viable at current market prices.
Interesting take.
Yeah, they also suggested that fundamentally some of the excess, less competitive production capacity out there probably needs to exit the market to really bring supply and demand back into balance and help prices recover.
Okay. So finally, just to wrap up the performance piece, what were the primary drags on profitability in this period?
Well, the lower profitability in Q4 FY2025 was really driven by a few key things we've touched on. That pricing pressure, first and foremost.
Right.
Lower sales volumes in some areas, particularly U.S. exports. And then some specific one-off expenses, like those costs related to closing the Lostock facility in the UK.
And looking ahead, how do they plan to drive profit growth?
Well, they aim to sustain sales volume growth by, one, maximizing output from their existing plants,
Okay.
and two, compensating for losing the UK soda ash production by ramping up in India and Kenya, where they've just added all that new capacity.
Right. Leveraging those investments.
Exactly. They expect those new capacities, India soda ash and bicarb, UK pharmasalt, to contribute incrementally to both volume and profitability in this next full fiscal year.
And cost efficiency.
Huge focus there. Cost efficiency and improving operational competitiveness, especially for those challenging U.S. exports, that's crucial for improving margins. And that successful restructuring of the UK operations, getting that right, is expected to be a key upside driver for future profitability. The goal is really to get the UK profile looking more like the profitable operations they have in Kenya.
Okay. So to bring it all together then, our deep dive into Tata Chemicals' recent performance reveals. What's the main story?
I'd say it's a situation with definite short-term challenges, mainly stemming from those pricing pressures and the variations in demand across different regions. But set against that is a more optimistic outlook for the medium term. And that optimism is really based on that growing demand driven by sustainability trends, plus their own strategic capacity adjustments.
And their path forward, their strategy seems pretty clearly defined.
Yes, I think so. The focus is very much on boosting operational efficiency, being really diligent about managing costs,
Right.
and making targeted investments, both in those higher value product segments and in markets with strong growth potential,
Right.
like India and Kenya seem to be.
Okay, so here's a final thought for you, our listener, to consider. Given these ongoing shifts we're seeing in global supply and demand, and this increasing global focus on sustainability, what might be the significant long-term implications for established commodity chemical producers like Tata Chemicals?
Yeah, and maybe how might they need to further adapt their strategies, not just to stay competitive, but to really thrive in this clearly evolving global landscape.
Something to think about. Thanks for joining us for this deep dive.